Hey everybody, DayTraderRockStar here, and this video is an epic video. It really details what we're going to do is detail the secrets of a success for trading, and I was wondering how I was going to approach that because it's such a, it's such a kind of a catchy phrase, the secret of success in trading. Anyway, you know my story. If you haven't, I'm DayTraderRockStar. I've been trading for 21, 22 years now. I host a show each day, Day Trading Radio. We're on the air. We're trading together as a team. And, I live and die by a great setup. And I don't die, I shouldn't even say that. It doesn't come out sounding too good, live and die. But what I basically do is go to the market each day, searching out the best setups in the market. And over 20-something years, I've been able to narrow those setups down to just a handful. And it's so important to understand that's the success to trading, is understand what to trade and when to trade it. Believe it or not, this is the second time I'm doing this video, and it pisses me off because I did such a good video before and I don't want to leave anything out, but then the video player crashed. I didn't get to save it, and that was it. But this video is taking place here in March, and the market's here just off of recent highs on a daily chart. President Trump administration has pushed this market to all-time highs, and this last couple of days has been really the first. Well, yesterday was the first day we've seen more than a 1% pullback in the market in over a year, or maybe since October. Actually, I wouldn't say over a year. It almost seems like over a year. A few months. Let's call it a few months. It's we've been just moving on up. Anyway, every single day we come in here, what I want to talk about is that go-to setup. And like I said, trading is great. You're sitting in front of the computer. You're trading stocks, but there has to be a method. This should be a business for you, and that was the first big thing that really. I wanted to get across here. There was in the beginning of my trading career, I was just a cowboy just like anybody else, learning the ropes and soaking in all the information and trying everything and almost learning by trial by fire. And lots of times things were just, it was just momentum, and I didn't understand what was going on. I didn't understand the internals of the market and why things worked and certain things work. And over time you start to realize, hey, certain things work great, certain things are just random. And, the real success comes in when you're able to separate that and understand what works great and put that on a certain, put that on the top shelf and make sure you always, always trade from that section. You want to take the best of the best. Anything else is just a waste of time, and it's basically going to the casino. I mean, you have odds at the casino too, but you have great odds in the market as long as you know and recognize what the market's going to do. For me, it's math, it's technicals, it's charting. There's a lot of things that go into this trading. It's not so much what I believe the stock is going to do over the long term. It's just I want to recognize the time that stock moves it gives me a high probability time frame that it's going to make that move in, and I could take advantage of that and trade it, and then get the hell out. And that's the goal. And we've over years of trading, really have developed a great methodology that outlines these positions. But the key is to be great. And again, I mentioned this in the last video. The real key is to, what separates successful traders consistently and just random traders that are eventually going to blow out. You're taking 3 steps forward and you're taking 5 steps back. You want to take 5 steps forward and 2 steps back, maybe. I prefer 1 step, if any. But the big key is understanding that you have to only trade the best setups. And there is a few best setups in this market. And that's going to keep you alive. It's going to keep you well. And the market's going to make you money. It's going to make your dreams come true. But it's the hardest thing in the world to do. Because I could tell you that. And as people told me, well, I don't know how many people even told me. It's over time and over years of trading I've realized, there's no sure thing. That's for sure. And, there's always a chance the market's going to catch you. But I also, over the years, recognize certain patterns that play out in a very high percentage of the time. One of them is the divergence pattern. And that's what basically I teach. And And the last couple of days, we've been watching this market, and I've been getting back into the futures using divergences, and we've had some great trades. And I want to just identify those to you, and kind of, you know, press the point that important that you have to just take these setups. I want to be very, extreme in saying this. There's no time for experimentation in the market or guessing. This is dealing with real money. If you just deal with a certain amount of setups, a high probability methodology, there's a what's the word I'm looking for here? A precise criteria for an entry, an exact criteria for an exit. That is your business plan. Your business is to make money in the market. My business is to come in each day, find these setups, trade them, and get out. The easy part is we're spotting them. I teach that. It's easy enough to spot them. The hard part is making people understand that every entry is not going to give you what you plan on getting. Like a lot of people have brackets in. Some people are looking for a point, 2 points, just in general terms, whole numbers, whatever. And the market tends to give you especially if you use stochastics, which we're going to go over. If you use that, you'll see that, the short-term time frame, we have a nice wavy action, up, down, up, down, up, down. Lots of times these could be just tracked with the stochastics, up, down, up, down, up, down. So why would you expect anything different if that's what's happening? So if you could recognize where that up is going to come, and there's a better chance of a further up, that's half the battle. You get in. But if if you get a nice move off of it and you get overbought, you have to recognize that the chances are now that we're going to actually pull back. You might pull back more, might not less, but the high probability zone has passed you. The divergence setup has passed you. That's the important thing. You have to learn the divergences. Divergences are very important. They're key. I stress them so much that, again, let's take a look at how they set up. I want to actually show you a little bit about divergences, and I'll show you the ones that set up today, and that's basically it, I do this every single day. We try to get into both stocks, options, and futures using divergences. With the patience, that's required sometimes. Sometimes, market's not going to give you the setup you're looking for, and that's where the market's going to come up and grab you because you're not, you don't have that, you're not in that zone, that HPS zone. So where you have that signal, you have a better chance of a bigger move, and you're in it. If you're not in that zone, you're outside that zone, and you're just messing around with the market. You might be getting good trades, you might, but this is the best, the cream of the crop. The nice rotation here is just basic stochastics. We're going to be dealing with stochastics and price. Stochastics are, I'm not going to go into the whole indicator and break the stochastics down. I have a lot of education on that. Just go to Day Trading Radio. Actually become a member of Day Trading Radio. It's even better because I have forums of videos talking about these setups. Or you could go to YouTube and just do Day Trading Rockstar, and I have about 300 videos. A lot of information out there. So just help yourself to that. But basically, we'll be mentioning the stochastic oscillator, the indicator. And like I said, I'm not going to go into the whole description of what the stochastics mean and how they set up, but I want to show you the setups. So I only have a certain amount of time in the day. Again, stochastics are typically an overbought and oversold indicator. A lot of people have just learned to understand overbought levels are above 80, oversold levels are below 20. And, markets tend to move, and you can see the momentum moving higher. The price usually moves with that. If the stochastics roll over, price is rolling over. What came first, the chicken or the egg? Doesn't matter. You have an overbought and oversold level. That's what stochastics are generally accepted for. All right, we use stochastics as they were invented for. All right, divergences. George Lane, again, the whole history behind that. I won't even go into it in much detail. I have a lot of information on it, but stochastics are a momentum indicator, and when we see a divergence between the stochastics and the price, now remember what we're talking about. As the price moves higher, or the stochastics move higher, that means the momentum is moving higher, moving higher, moving higher. It's actually measuring the close on the candlestick and how far that closing up towards the top, and then it starts closing down. So you're starting to follow that momentum on the previous candles, and this is what's tracking. And you get into an overbought level, and then the market starts to rotate back down. You start to close lower until you get oversold, and it starts to rotate back up. Very simple stochastics. Now, how do we how do we use the stochastics? We use the stochastics as, and I want to show you, as a divergence. And divergence is something that diverges from the normal. In this case, we're looking at that, stochastics moving up. Here's coil stochastics. There's some other setups here that I teach. But we're going to talk about the lane divergence. And I'm just going to give you an example using the bullish lane divergence, just to kind of give you a good example. The opposite is for the sell side divergence, and I guess I'll give you examples of that too. But most of the time, we're going to be looking at this bullish divergence here. So the price is moving. This is the price of the stock. You're moving. You have a move up and then a further move down. Remember, we're in a downtrend, so we're actually looking for divergences in a downtrend. And a trend is defined basically by a trend line, and that's a series of candles that are making a series of lower lows and lower lows and lower highs. And you can kind of contain that, inside of a channel, the width of the breadth of the width of the channel. And lots of times we're looking for that divergence as a reversal out of that candle. And it might not show up all the time, but when it does, it's dynamite. So again, I lay that question out to you. Do you want to wait for the best, or do you want to just trade randomly? That's a big difference between being real successful and doing what you want in the world, or just being, taking your chances and gambling. The divergence here, lower low, a lower high, and the stochastics usually going with the same direction. Remember? Stochastics moving down, price moving down. Stochastics moving up, price moving up. Price moving down, stochastics moving down. Stochastics and price moving up. Stochastic and price moving down. All of a sudden, the price makes the lower low. We start moving back up, but we never made a lower low. We started heading up higher than the previous low. So instead of we made a lower low on the price, but a higher low on the stochastics. We made a higher low. That's your divergence. And that's, it's easy to identify. I have a strict criteria on it. Everything is, I could show you that criteria too, I guess. Let me show you that. And that's what it looks like. That's your divergence. Basically, it's very simple to say. I have many examples. These are all the trades we've taken on it. Lots of times they'll come into patterns. You'll see these divergences show up on patterns like this one. This is the wedge pattern. And basically the low, the pop, the lower low, the pop, the higher low. Divergence, breakout. Major moves off of that. And they happen in the futures. They happen on stocks. It's just, these are daily patterns that we trade. This is like when you see this on the screen here, this is basically almost what you're looking at during the day when I'm trading. We're pointing out divergences. You could watch the move from that. This is what we call a dual stochastic bear flag setup, or triple stochastic bear flag setup. Very good setup here. The 44 and the 14.4. I usually use the 60-10. It's more advanced stuff. Bear flags, certain things but the divergence, boy, you don't want to miss that. So let's talk about what happened today. And again, more examples, divergences and stuff like that. Let's go down to the price, the chart here. Now this is yesterday when the market was selling off. We had over a 1% move down in the S&P. First time we've done that in quite a while. And we got down to a point here about 3:15, and we started getting a couple alerts. We had a couple tradeometer alerts and a Rambo alert, which identifies divergences on our dashboard. And you can actually see there's a slight divergence here. And we had a nice little move here. And like I said, when you have a divergence, the first low is underneath the 20. The second low is lower, but the stochastics holds above the 20. That qualifies right here. And the candle is important too, a reversal candle. Now this moved up, and like I said, this separates the winners and the losers. The winners recognize, there's a divergence here, but they also recognize that because of the time frame and the trend, I'm becoming a stutterer now. The trend has been down. It's been a very strong trend that each buy, or at least each bounce, has been sold into. So you have to realize that there is a little intuition you need to to have. There's experience that needs to be gained over the years to know that trending markets are very strong. You shouldn't try to trade against them. It's better to trade with them. But if you do happen to have a divergence, understand that rotation, which is going to give you your first exit scenario, will time that. You say you're looking for a point and you get 3 ticks, and you get overbought here. You take it off. That's money found. These are what I call the $20, $50 bill trades. You find them on the ground all the time. You just have to recognize them, get in them, and take them off. As long as you can take them, as long as you pay attention to the divergence entry trigger and the exit trigger. Now this is off of that 1 minute time frame, and this is not even taking in consideration multiple contracts or anything. This is a standard. A look at your entry criteria, exit criteria. You do that, you're going to be in good shape. Now you continue on. The market continues on. I ended up taking this trade. This was a trade. We came down to multiple trend lines. You can see this blue line, which was a really bigger channel line. I think it was a 1, 2, 3 channel after the fact. Oh, this yellow line, this is the one I wanted to see. It was a nice trend line. There's a lot of trend lines here. I'm not going to zoom in here. The fact is, we had this little pop. We're oversold here. All right. Oversold. And we have this pop up to the 20-period moving average. And we quickly move back down. And we take out the lows. Another nice candle closes on the highs, but we close higher on the stochastics here. Very clean divergence. Got in there, and we got a couple points on that. Real fast pop. Again, that first pop brings us up to a trend line. It gets us overbought right here. It's a perfect setup. You have a choice of getting out, so you don't have to deal with this other crap pullback. Again, this is a business model. So you're in and out. You're in and out, no problem. Just to let you know, you put your stop under that candle. So whatever that second divergence, that divergence candle that puts in that reversal, preferably you want to have a reversal candle on that, be it a hammer engulfing pattern, a piercing pattern, an outside day, something that really represents a big reversal candle. And this on the 1 minute time frame is relative. This would be much better if it was on the 5 minute time frame. We get a bigger move, but the 1 minute time frame, we still want a reversal. And you put that stop right underneath, 1 tick underneath it. So you have a great entry, you have an exit scenario or an exit criteria, and you're out and you're just trading, and then you're waiting for the next one. Now these other signals you're seeing on here are based off the tradeometer, and I recommend trading the tradeometer too. Using the same type of setups. Use a reversal candle. You get a tradeometer and you see a candle that's sticking up there. Take that trade, put the stop above it, and you're probably going to be in good shape. In some cases, you actually can drop a little bit. Again, we're kind of going off topic here because I want to talk about those divergences. But you'll see other things. So we continue on, and then today we see the market setting back up. And this is what I call the walkthrough on day trading radio. This is the morning trade, 4 o'clock, 5 o'clock. We have a lot of people trading the markets then. And then, of course, most of the traders getting in around 9 o'clock, 9:30, the market here opening up. So as the market opens up, we continue to go through our marking the, we have a tradeometer, sell signal here, it pulls back. Now remember, I'm very strict on my entries on the ES because it's, very volatile and the market's been very kind of weak the last couple of days. I still want to wait for those divergences. So we had a perfect divergence right here, 10:30. We actually had a bounce, and I'm going to zoom in here a little so you can see a little bit clearer. You have this nice little downward move. It bounces back up. We had that low here where that's circled, pushes back up, and then it comes back down. And right at 10:30, we had some oil news, and it spiked us down. And lots of times the divergence will happen on news. I'd rather let the news play out first, see the divergence caused by the news, then get in, than to be in it before the news. So let the news, if you have a ninth, this is a perfect setup. A wedge pattern, you're very close to the lows, you flush it out, you close higher. As long as you get that turn back up, you're good to go. And this gave us over 2 points. And again, do the math on that. You're not over trading in this market. Then you wait around, you're waiting around. Here we have a triple stochastic flag set up and a big push higher. Market here kind of dragging down, and we were at lunch here. I was watching the show from the phone, and Paul was describing this divergence that's set up here. Here you have that low, and you actually have a little lower low here. But you can see this kind of running divergence, a series of higher lows, and we had 1, 2, 3 lower lows, and a nice channel breakout. I wasn't in front of the screen for this one. I did mark it off when I got back. A couple of flag setups, but the divergences, that's the key. That is the absolute key of between being successful in the longer term than just being lucky. And that's the hard trade. That's the hard thing to do because it requires discipline. It requires, more of a, very safe approach to the markets. But it's great. It's absolutely fantastic because it's less stressful. There's just a lot of things going for you when you have a divergence like this, and very easy to spot them, especially with the tools we have. And when you do see them, usually they are the lows of the session. A big divergence like this, and I mentioned this on the last video that got crushed. When you get a setup here, you could say, all right, Johnny, we have a divergence and it popped, but I think it's going to go higher. And we thought this was going to go higher. And why do we think it's going to go higher? Well, the secondary rule of a divergence setup, and again, pay attention to this. When you have a divergence on the 1 minute chart, which I look for, we have people looking at them on a 3 minute, we have a 5 minute, really depends on what time frame you are. But whatever time frame you're using, and you have a divergence setup based off that time frame, you still use that same rotation exit. If it's a 5 minute divergence and this gives you that 5 minute chart, then you push up, wait until a 5 minute rotation if you want to do that. And that's going to probably bring you up here. It all depends on how the next time frame, the next bigger time frame. In my case, I used the 5 minute along with the 1 minute. So we had this nice divergence. It was about 10:30. So I want to look at the cash. I usually look at the cash. You could look at the futures also. Just do a control, whatever you need to do, control 3 to get a 5 minute on this. But I typically go right to the S&P. And remember, what are we looking at here? 10:30 on Wednesday. That was today. 10:30 today. All right. So we look at the 10:30. It's over here. It was right here. 10:20, 10:30. 10:30 was basically almost this candle right here. Anyway, what we wanted to see at 10:30, even though you had this beautiful reversal candle, which I think we pointed out, that actually had that rotation back up. If that 5 minute starts to rotate in, you get a trigger, you get in your 1 minute, and during that 1 minute time frame, you're up here and you say, well, I'm thinking of taking profits. If this is oversold or at least starting to head up in the meat of the move, not too far, you don't want to be extended up here. But if this is down here and starting to move up above that 20 line and you just trigger the 1 minute, you have a good reason to kind of look for a bigger move higher. And you could actually see this worked out perfectly. It rotated back up, got it back 20, and then, up in this zone. Again, this is not a game of darts. It's a game of hand grenades and horseshoes. We just need to get close. So as we approach that overbought level up here, you can see the market having a little difficult. It did pop up here, and then it kind of just drifted sideways and then rotated over. But the big move is already, was from down here to here. This is your high probability setup. The 1 minute divergence with your 5 minute kicker. 5 minute gets overextended. At this point, you're playing a guessing game. You might say, oh, this is an inverted head and shoulders pattern. It's going to pop. I couldn't care less. This is a pure $100 bill right in my pocket times how many contracts I'm holding. That's all I want to do. And you do that enough, it becomes a drug. That becomes your addiction. The patience becomes your addiction. Only taking these setups becomes your addiction. You don't become over trading. You become so disciplined that you only take the best. You only take that pure divergence. And when it sets up. And at that point, you start to realize, hey, there is a magic to this. This will work out. I can do this anywhere in the world. Here's a nice double bottom divergence here at 1540. You can just see it. This is a great setup usually too. You can see that higher low, the double bottom there, and just a nice move up on the 1 minute. Again, that's 44 to 47, 3 points. You can scramble 1 point out of that. I say the market gives us a divergence, give us three points, and I'll take a point from it. An easy point, a sweat-free, no pressure point, easy, And if you have multiple contracts, you're just, you're taking that point, and then you're raising your stop up, and you're chasing it up, So you're win-win either case, And again, the key does come down to multiple contracts. I have a special thing I want to be releasing to you guys. It's a position sizing formula to use with the ES. Just kind of remind me on that, all right? I already posted it once, but this would be a good time to go back and review it. But if you want that, just, again, like I said, hit me up in the room. So I hope you understand what I'm getting at here. It's the patience. It's almost like you're going to be a Zen warrior, a Shaolin monk. You practice something over and over again. Bruce Lee said, "I don't fear a man who practices 1,000 kicks one time. I fear a man who practices one kick 1,000 times." This one kick of ours is this divergence setup. All right? I'm DayTraderRockStar. I'll see you in the markets. Hope you enjoyed this video.